I guess 6:01, on January 14th, 2025, and this is the Finance Committee of the City of Stoughton, and I'll call the meeting to order. Everybody is present. No one is missing, and we're recording correctly? All right, then I can certify that we are in compliance with open meetings law. Do we have anybody for public comment at this meeting? Hearing none, any reports or comments from committee members?
Yeah.
Yes, welcome back. It's been a month. It's been a while. All right. I had trouble getting into the place. So we will move then right along to communications and presentations.
Okay, the majority of these items are going to go pretty quickly. Walmart is just informational only. It finally took until year 7 for them to hit the $12 million guaranteed assessment. They were at about 12.6 million this year. So unless they appeal the assessed value of their facility, it looks like they are no longer going to have to give us tax increment guarantee payments. Any questions on that topic?
Just for those of us who maybe aren't as familiar, my assumption is that that's just, can you explain the payments?
Sure. They guaranteed that we would get property taxes on a $12 million property. And for the years that the assessments was only at about 10.5 million, they had to pony up the difference between the property taxes at 12 million versus 10.5. And that difference is no longer required. Again, assuming they do not appeal the assessed value.
Thank you.
You're welcome. Okay, seeing no additional questions. Next item is just informational only. Notice came from the IRS telling us that one of the IRS's vendors accessed the city of Stoughton data in a improper fashion. So they are taking that person to court. I don't think there's anything we need to do about it, but I'm just letting you know that we did get that notice from the IRS. Any questions at all? Okay, the Ellers Municipal Advisor Client Disclosure, that's a standard thing that they have to give to us every year. Just talking about their fiduciary duties. So nothing we have to do with it. I just gave it for your reading pleasure to help you fall asleep at night if you are having problems dropping off. Any questions at all?
No?
Okay. General transportation aids and connecting highway aids. We got the final numbers from the Department of Transportation, and we had to estimate share cost percentage because that does change every year depending upon the funding level. But we came in at 0.09% short, so we were almost practically on the mark. So that's the advantage that we have knowing the calculation formula. We can find out the GTA ahead of time. Again, this is just informational for you folks. Any questions at all?
Nope.
Okay. The mileage and meal rates, if you remember, within the past year, maybe two, we indexed the mileage rates to the IRS rates and the meal rates to the General Service Administration, federal government, so that we had an outside party establishing the rates for us. So this was just my communication to everybody at the city about the updated rates and for those two things, and reminders about reimbursements for meals. Any questions?
I'm much happier that we have that pegged to that index. That is much easier than having to look at it every year and haggle about
An
what
arbitrary,
yeah.
Yeah.
right, you're arbitrarily choosing a number, and in this case, we just leave it to the IRS to choose it for us
That seems pretty
and the
standard.
GSA. Pretty standard in the government community that I've worked with and others that I'm aware of. Okay, the vested sick leave balance. We actually had two employees who retired. Well, one has retired and one has announced her retirement. So those were taken into effect for the calculations. The calculated amount outstanding is about $1.2 million. I've got it in red. Unfortunately, when I was looking at the 24 calculation, I found an error in the formulas in 23. So between the change in the sick bank hours, pay rates, and correcting that formula, we went up approximately 37%. Yeah, 37.0%. Heck of an increase, but I wanted full disclosure so that you folks knew about it. And we attached to that is also the resolution 131-2023, which gives me the authority each year end to adjust the assigned fund balance for these retirements through a journal entry. So I just attached that for your information. Any questions on this topic at all?
Just a question of curiosity. And maybe you don't know, does the city have a cap on how much you can earn
Yes.
for sick leave?
The general employees is 1040 hours. You can have a higher bank, but you're only going to get paid out for 1040 hours. And the sworn officers, union members do have a higher value. I don't remember that one off the top of my head, but it's slightly larger.
Thank you.
And the sick leave only gets paid out if you have decided to sign up for WRS retirement benefits. So for instance, we had a department head last year, 23, who left for a job in Minnesota. Obviously didn't take the retirement benefits, so that individual lost their time bank. But the two recent people are eligible for WRS retirement benefits, so I accrued for those.
Thank you.
You're welcome. The next item is the depot expenditure report. Nicole Marie, I'm going to let you handle this one because you prepared the report.
Okay. So Mayor Swadley had asked me to kind of bring up the past historical expenses for utilities or any repairs that we'd had for the depot. So I compiled those together on there. One thing we discovered today that's not reflected in there is about a $44,090 grant that the depot passed on to the city. So there was a roof repair, I think in 2022 or 21. It's reflected in the report on there for about a little over $8,000, and then there is also a $4,000 grant that got passed from the Historical Society to the city to assist with those expenses. So it's just kind of a snapshot of what the depot has been needing for building repairs and maintenance over the last 10 years.
And that'll be included in a presentation at the city council I'm going to do.
Any questions? No?
Thank you for putting that together. It was good Sunday reading when I got tired of watching the Packers look bad.
What'd you do after the first 9 seconds you started reading it?
Moving right along. All right, so the next item is the approval of the minutes from our last meeting on 12/10/2024. Were there any questions or changes needed to be made to those minutes?
Motion to approve minutes.
Okay, moved by Brett. Do I have- Second by Ozzy. Any discussion? Hearing none, all in favor, please say aye. Aye.
Aye.
Any opposed? All right. The minutes are passed. Next item is discussion and possible action concerning GIP Glacier Moraine standby letter of credits.
Okay, with the GIP Glacier Moraine, otherwise often called the Grossel properties, we had a developer agreement and contract with the property owners that they had to have a certain amount of building value so that at the end of the calculations, which would have been year 2036, we would have 550,000 in required tax increment. Going through the calculations this year, they were approximately 72,000 under that amount, based upon the contractual terms. So I had issued a notice to them and their banker that we were drawing on the letter of credit because we had until December 15th to do so for that dollar amount. I'm sorry, it was 74.8. And the Grossels are contesting how the calculation is going. I know that they're both here. I wanted to open up the floor to them to let them speak on the topic if they wanted to.
And then I'll provide a little bit more background because I don't think Dave was here when we negotiated the developers agreement. So this is,
Correct.
their properties are out on Glacier Moraine Drive across the street from Emmy Roth. And the first project we did out there was North American Fur, which is across the street by Emmy Roth. And when we negotiated that property, we had an unsecured guarantee. And what happened is North American Fur, unfortunately, went Chapter 11, whatever the Canadian version of that is. And then eventually that both of their buildings was purchased by Marquise Metals. So we decided that going forward, we would seek a secured guarantee. Oftentimes it's a letter of credit. And then when we work with the developers, when we negotiate the developers agreement, we have benchmarks in there. And what we did is we took what our costs were to make that development shovel ready. So it was land acquisition, it was all the utilities that had to be put in, the road that had to be put in, and we took that dollar amount, divided it out by the number of acres, and then multiplied it. So we basically prorated it per acre. And we said that going forward, our goal would be is to have a guarantee in place that was equal to recovering our cost per acre. So we did that with exclusively roses. We did that with the Grosso property. We intend on doing that with any additional properties, and I think we had something in there for, for other buildings and other developments since then. So, and the reason we did that is because right off the get-go, that tax incremental financing district was underwater. And we wanted to make sure that it didn't go further underwater. The good news is that with the addition of Emmy Roth, that TIF district, and Dave can probably answer it better than I can, is in a better place. And he can probably give you the specifics of that. So with the Grossos, when we met with them, we put together a timeline, we projected out the values, and I think their intention is to create the value in order to satisfy the benchmarks that we put into the developers agreement, and it appears that they fell short. And I don't think it was intentional. I just think that it was either a miscalculation or that the values came in under what was projected, and I'm not sure which one it is. And what I'd like to see us do is have a discussion on whether or not we're willing to consider working with them. They still have 2 additional buildings to put up. Their buildings are business incubators, so they have garages and offices, and a lot of startup businesses start there and eventually either expand or move into a standalone building. So we want to encourage the economic development, the job creation, the goods and services that they're providing out there. I believe we still have 2 more to build.
I already have the permits for them.
So he has permits to build the other 2, and I think my understanding, and Dave can help with this also, is that once those are built and they get assessed, which lags, and I think that's part of the confusion, you build them, they get assessed, and you don't collect the taxes until the following year, should get us in a place where overall where we need to be on that property. So am I getting that right, Dave?
Generally, yes. If the buildings are constructed in 25, we don't get the revenue until 27. But yes, if we were to continue along the same lines right now, they would probably at one point reach the 550, but I had to go with the contract that the Common Council and the developer signed.
So what Dave's doing is he's following the agreement. I asked the bank to pause drawing on the letter of credit till we could have a conversation here and possibly at the city council. I have a couple thoughts. One thought is, and I don't know the answer, are the assessments on the buildings where they thought they would be, more or less? And yeah, feel free to come up because I don't know the answer to that.
Is that right? Well, the rules we had were, I had up till December 15th before you were going to take the money from me. The problem was you appraised it 11 months earlier in January. Had you appraised it that day, December 15th, you would have seen we finished buildings 5 and 6, and in September we put over $100,000 into the 400 more feet of stormwater and an $80,000 pond that I put in September and October. And now I'm staked out, and we also had Fox put in the sewer and waters for buildings, I've got the wrong number, 7 and 8, buildings
yep.
7 and 8, and I now have the building permits for 7 and 8, but it takes 2 months just to get the permits through the state. This stuff doesn't happen overnight. I'm ready to build the other ones. Do you know what I'm saying?
Yeah, so I think...
And the other thing that I wanted to tell you, when I went to buy this property, I bought 4 acres. And I was putting up 8 buildings that are 44 by 150. Then when we put it on there, I decided I wanted an extra half an acre. I wanted 12 more feet on either side of the property because we got to cut the grass and it was too close to the buildings. So I put on another half acre to it. After we did that, The fire department came in and cut off 12 feet off of 5 buildings. They needed them from 150 feet long to 138 feet long because they needed more space to get the the fire trucks in and out of. Do you know what I'm saying? But
Yeah.
I thought when we were doing this, and that was in 19 when I started talking to you about this, after 6 buildings, I would have the amount you wanted, even though I'm doing 8. At 6 buildings, I would have been where I was. And had you have appraised it 11 months late, you know what I'm saying? You appraised it in January, but then on December 15th, you wanted the money, and I asked the guy, well, could you have the guy come back and appraise it today? No, you have to go back what it was almost a year ago. If you'd been there, I think I should have been okay. So that's where I'm at.
Okay, so I think the bottom line is they built it in good faith. The appraisers are third party, and they appraise it, and help me with this, Dave, if it's a state regulation of when they appraise it. I'm not sure how that works, but typically you build it and the appraisal comes and then the actual value lags is the word I'm going to use here. And I don't know the specifics of how that works. So I don't think it was anything intentional that they didn't make the goal. And the question is that something we want to try to provide relief for? And if we do, what should that look like? Because I think that at the end of the day, the project's going to value out and the TIF district's going to be fine. We want to continue to encourage more development, not only there, but in other areas of town. So we're in a different place financially than we were when we put it into place, and we want to find out from you all how you feel about that. And if the answer is no, a deal's a deal, okay, we can tell them that. Or if the answer is we're willing to work with them, we can talk about some options. Did I miss anything, Dave?
Just to clarify, it's actually Wisconsin statutes, not regulations. And the assessed value at January 1 of 25 goes to open book in April, when parties can appeal that assessment. If they do not agree on the assessed value, then it goes to Board of Review. And then if it doesn't get agreed upon at Board of Review, it goes to the Circuit Court. So that's why there's a big lag between the assessed value and the property tax bill time.
And if I'm understanding the numbers correctly, Dave, you said that the agreement was roughly $550 in 2026?
Well, Tim, can you put up the that document? And it's probably the 3rd or 4th page in. That's the one. You've cut out on me, Tim.
All right, it should be popping up now. Can you see it?
Yes.
I can
Can everybody
enlarge
else
it a
see
little
it?
bit.
Okay. Basically, what this is saying is that we know the actual assessed values and the mill rates through revenue year 24. And then the contract says we're going to assume that the mill rate goes down by 1.50% going forward. So we take the known tax increment and then by contract estimate what it's going to be through 25 through 36. So that's where you get in the tax increment column the 356. Oh, this is a year old, Tim, but the concept's still the same. That the tax increment, which the document in the file shows, is 475,000, and the bottom line should be 550,000. This is actually the same calculation methodology that we've been using for the past 3 years when we've lowered the amount of line of credit that GIP Glacier Moraine needed to adhere to. So we were giving them the benefit going forward. It's just they don't agree with the calculation now, and I'll just leave it at that.
Okay, I think I got it. So there's three, I guess, options laid out here. Like you said, Tim, a deal's a deal option. Looks like there's kind of a partial and then the charge interest on tax increment shortfall. Are those the suggestions? What would the effect be of like the charge interest on increment shortfall? I can do the math on all of 75,000 and half of 75,000, but
Well, I haven't calculated it out because I don't know what interest rates you're using, but it's just like they would have a loan that they would owe for roughly 75,000 at, that's just through conversation, 6% interest. And, so that might give us over 4 years or whatever, 15,000 in interest.
my assumption is that we're not being asked to approve one of these options tonight. Is it just that we would
Well-
be expressing an interest in opening up negotiations?
To see if you're interested, yes, and you may want to do something else. We just put those 3 items down as possible ideas.
Yeah, so I think the intent is just to get the temperature of the room. And if you want to say a deal's a deal, then we can communicate that. Or if you want us to do some additional work, then at least they know we have direction to do that. And if you have some thoughts on what you would like to see that look like, we would certainly look at that and bring it back at the next meeting. So I think that's kind of what we're looking for. We certainly want to work with our builders and developers within reason, but it's really a policy decision. The staff, we can't make that determination. So that's why we bring it here. And you guys can, it's kind of up to you guys on what you think the appropriate course of action is. This is the first time I think we've run into this situation. The closest thing we had was the guarantee that Dave described earlier on Walmart. But that itself was a little bit, I think it was a little different than this, maybe similar, I don't know, Dave.
No, Walmart looked at it on an annual basis, did not project out into the future. This is using future projections.
So we're just looking for direction at this point. Go ahead, Oz.
I'd like to see us come up with a workable agreement, do a little more homework on it. Is there any way to get a rough value of what was added since it was appraised without being real costly?
We'll probably get that in the next couple months, right? Based on the
Correct.
schedule?
Yeah,
Yep.
yeah.
I
And
think
is
we'll
there
receive those numbers in March.
a deadline or anything where they could be penalized or they would lose tax credits or, anything that might be an unintended consequence for not making a decision sooner than later?
Not that I'm aware of. That may be a Rick Manthe question, but
All right. Yeah, go ahead.
I did want to let you know that in 300 Business Park Circle, where I bought that land and had to do so much per acre on those buildings, which is about, 2 blocks away, I went way past what you asked me for on that building. That's on 300 Business Park Circle. And that was years ago, of course.
Sure.
And then I got this lot, of course. Once I got that one done, you know what I'm saying, but I've done it before with you, and I had more into it than it was supposed to be at.
Okay,
That's all I'm saying.
thank you for that.
My feeling is that if, I'm in alignment with Ozzy, I would say if there's not a financial urgency in acting immediately, that, and it does sound like we definitely, there's not intent in terms of this shortfall. It's possibly even as simple as a timing issue. I'd be open to having some negotiations around, or discussions around how we can come to a mutually satisfactory agreement.
So I guess what I would suggest then is either provide us some ideas now or offline. You could send them right to Dave. So when we come back at the next finance committee meeting, we have something specific for you guys to consider, whatever that may be. You know, we talked about maybe a portion or maybe just interest on the outstanding. We can get you those numbers if that would help you in your decision making.
I think that might be good. Greg, did you have?
Yeah, I just wanted to voice my agreement. I think that's the best way to go. It's obvious that the intent is to complete this. So, I mean, I see no harm.
Adrian, did you have any? I want to make sure that we recognize you online.
Thank you. No, I'm in line. I agree that's a good approach.
Yeah, I think if we could get some numbers to see what the various suggestions are, that would be beneficial. Otherwise, I feel like I'd be guessing. I could make an educated guess, but.
So if you're looking for numbers, are you looking at just those three options, or you have other ideas?
I mean, based on the numbers you provided, I think we'd really only need the interest on the tax increment shortfall, because the other two would seem to be pretty straightforward.
Okay, we can calculate that based upon the 77,000. I'll probably just do a chart of whatever it is, 3.5 to 7% in 50 basis point increments. We'd have to make some assumptions as to the term of the interest.
Mm-hmm.
I think another thing to consider is that if he's already got it staked out and building permits, they're acting in pretty good faith that they're going to get those additional buildings put up this year too, so we need to consider that as well.
Okay, we can attempt to get that calculation.
You have to throw the water into the spot for it. It's all ready just for spring.
Okay, so what I'm hearing is we're going to do some calculations on the potential interest costs for basically, I'm going to call it a late payment. And then we'll bring that back at the meeting in 2 weeks. And you're welcome to come back at that meeting, or we can let you know how that comes out, whatever you'd prefer. But we're trying to work with you here, so hopefully that helps.
Yes, yes it is.
Okay, thanks for being here.
Okay, appreciate it, thank you.
Okay. Item 9, discussion and possible action regarding future increase in aldermanic salaries. We had this at the last couple meetings. Greg?
At this time, I would like to withdraw the request. I think that given the input I've had, let me put it that way, the input that I've had from constituents, and the idea that we are more than likely going to have to look for a referendum to help with finances at our next for our next budget, it's inappropriate to ask for it this time. So I would make a motion to remove consideration.
Do we, if there wasn't?
I don't even know if you need a motion.
Yeah,
I
if there
just
wasn't
think
already a resolution, I wouldn't think
yeah,
we'd.
I think we just table it.
Okay, so no action taken.
I guess I would disagree. Council referred it back to this committee. This committee should take some action.
Okay, so then I would take action to table
Okay.
indefinitely.
This has been brought up when I was on the council several times,
Oh,
and
yeah.
it's the last time there was a raise is, I don't recall the year, and I think you're going to continue to see that every year there's going to be tax increases or whatever for the future as you go out. So if you're not going to do it now, I'd say drop it forever. Just, that's my opinion.
Yeah, I would agree with you, but it's just that with the things that we have facing us for this next year, I just think it's inappropriate for this time.
So we have a motion to withdraw. Do we have a
Motion
second
to
on
table
that?
it
I'll second the
indefinitely.
motion for indefinite proposal.
Okay, so we have that motion and second. Do we have other discussion around that? Honestly, I'm in alignment with what you were talking, and that was my feeling before we even came in the room. Any other discussion? Okay. All in favor of withdrawing the motion, please say aye.
Aye.
Any opposed? Okay, motion to withdraw carries, and we'll report that in our next meeting in a few minutes. Number 10, discussion and possible action regarding Stoughton Family Dental, Mercy Dental, outstanding invoices.
Tim, do you want to start the discussion or should I?
I can give a brief intro. Stoughton Family Dental, as you might recall, is a business on Main Street. They've been looking to expand their dentist's office. They have a building that has 3 floors. We're encouraging them to try to build out the 2nd and 3rd floor for apartments or hotel, which what it was back in the day. And we entered into a cost reimbursement agreement so that to cover some of our administrative costs. And at this point, they haven't paid it. We were hoping that maybe that they would continue to move forward on their project and make a TIF request and we could reimburse it. And right now, I'm not really sure where they stand on the project, but we have this outstanding bill from last year and we're trying to decide if we should make them pay it or if we should waive it or if we can leave it open. I mean, until we get to a decision point with them. Last conversation I had, we were talking and they were investigating the possibility of using historical tax credits on the bottom of the building. The other thing we're trying to do is we've been lobbying the state to change some legislation from 2 years ago. Instead of having revolving loans for vacant buildings downtown, we're trying to encourage the state to do grants for elevators and sprinkler systems and allow you to use those grants in conjunction with historical tax credits and other incentives that we may have, such as a TIF district. Probably won't get an answer on that for several months, whether or not, first of all, if it's included in the governor's budget, and second of all, if the Joint Finance Committee will support that request. If they do, that might change the scope of the project down there. So the question is what do we do with their open invoice? They haven't really expressed a desire to pay it because they haven't been able to move forward on anything. And I know they've accumulated other debt for like engineering and architectural and those sorts of things. So that's kind of my summary. Dave probably has more to add to that.
No, I think you did a very good job describing what's going on. The dollar amount is above the 5,000 limit for my position to write it off. So when I brought it up to the mayor, because it's less than 25,000, he wanted to bring it to the finance committee and get a feel for how they wanted us to proceed.
And I don't know what it does to leave it open, if that creates an issue for the finance department and closing their books, or if it'll get flagged by an auditor, or what happens.
Well, I'll have to reclass the revenue that we recognize to have it as unearned revenue. So it's going to put the TID number 10 even further negative now, if that is written off.
So it's between 5 and 25. What is the dollar amount? About?
I did not
Or we don't
print it
know?
off, but it was, I'm going from memory, 6,400
Okay.
or 6,600. The mayor has the authority to do that, and 25,000 and over, it has to be council.
Gotcha.
And if you don't want to make the call today, it's been sitting open since last, for months.
Again, this is just based on this information and what I read a little bit before the meeting. I'd be inclined to leave it open, not waive it in case there is further progress. I'd be inclined to leave it open.
And I can try to get an update on where they are by the next meeting. But we want to at least bring it to your attention tonight so you know that it's outstanding from 2024.
Yeah, if you can get an idea where they're at, that'd be very helpful.
Yeah,
Yeah,
agreed.
I think we all like to know that. So we're hoping they move forward with the project. I'd like to see them do the whole thing, but realistically, that's a tough thing. And, it would be more cost effective if they did the whole building at once because they get the economy of scale. But they're having a hard time. If they rent out the upstairs, they won't create enough revenue to pay for the major renovation the building needs. And that's why all these buildings have been sitting vacant for years. And that's why we're lobbying the state. And this is an example that I've shared with our lobbyists and our state representatives. If you really want these buildings to be developed and help address the workforce housing issue, you have to do better than a revolving loan program, because we have our own, and quite frankly, ours is better than the state's. And it's a lot less red tape.
Hard to believe there'd be state red tape. Any other discussion on this item? Okay. Item 11, discussion and possible action regarding 2024 building rent Stoughton utilities.
This is another one that I'm looking for guidance from this committee on. If you haven't read it, please read the memo that I sent to Stoughton Utilities. If I can give a real short explanation, this has been a problem that we've been dealing with. The lease ended almost 3 years ago, and we had to have 2 law firms trying to negotiate the language, and then we found out through Baker Tilly that we were not following Public Safety Commission or Public Service Commission rules for at least the last 35 years in regards to rent amounts and how it's calculated. So the 24 budget is set up for 148,000 in rent. We set that up before we found out the PSC rules error. The 25 budget is down to 20,000. Stoughton Utilities hasn't paid it yet. I don't know where to go from here. Do you want the general fund to absorb this difference? Do you want the utilities to find a way to pay it in full? Are you looking for some different solution?
So I think part of this you'll hear later on is why, we're having a conversation about the future of that building and whether or not the city wants to retain ownership, because the Public Service Commission rules really doesn't give us much incentive to be a landlord because we can't charge market rate to them. So that's part of that discussion too. But I think what Dave is looking for is what to do in the interim. So they owe us for what period, Dave? What'd you say?
Calendar year 24, 148,000.
Yeah. And I don't know if we have a legal opinion on that or if that's something that we should talk about offline. And we'll put Rick on the spot since he's here, Dave.
Yeah. So I've been trying to connect with the attorney from Boardman about trying to finalize, like, come to terms on a lease for the future. I can reach out to her again to try to move things forward and bring things back. I mean, what we had discussed was basically depreciation of the building as a collectible rent and having to allocate like maintenance expenses based on square footage to Stoughton Utilities and the other users. It's like, for instance, if we redid the parking lot or put a new roof on, apportioning those costs back to Stoughton Utilities and the EMS. So there wasn't any objection to doing it that way. We just need to, I guess, put pen to paper. But the gist of it is that the payment would be significantly lower than what it has historically been, just to comply with those PSC rules for accounting for their utility funds.
And just to kind of give a deadline, the auditors need to know this for the audited financial statements. So we've really got to have a decision made by late March.
Okay.
Yeah, I will send an email to the attorney here in the next day or two just to try to move things along.
Mm-hmm.
Thank you.
Or, I don't love taking a $128,000 hit.
No. So that'll be
So,
back at the next meeting.
Yeah, for sure.
Hopefully we'll have at least an update or a
Mhm.
memo from the attorney to let us know where we are.
We should have had this first so that we don't end on a down note. Any other thoughts on this item, other than getting more information, hopefully? All right, hearing none. Next item, which is the last item on our agenda, is future agenda items. So next meeting in 2 weeks, preliminary December fiscal reports, adoption of the 2026 budget calendar, and policy updates, possibly discussion about this again. And the Grosso property. Investment portfolio review, City of Stoughton referendum to exceed levy limits statutes. I assume that's supposed to be statutes. And then city policies relating to fund balance policy, potential revisions of the CIP, debt management and post-insurance policy, or post-issuance policy. Discussion, possible action regarding city property disposal policy and city budget policy. Anything else we need to talk about? Yeah.
I could add one if you want.
Thanks.
I did mention this to Mayor Swadley, but so the city does have a 4-year contract with Stafford Rosenbaum to be the city attorney. So you're entering the last year of that agreement. So you could, I think it would make sense for this committee to talk about that if it wants to go to RFP, how it wants to approach legal services in the future. So don't want to sway you one way or the other. So, but just at least put it on your radar because there's 1 year left, and that way, if you wanted to go to RFP, I wanted to make sure you
have
have time.
runway for that. Yep. Fair enough. I'd say we could add that. Yep. Anything else? Okay, I would entertain motion to adjourn then. Moved by Greg. Second by Ozzy. All in favor?
All right.
Aye. Opposed? All right, we're adjourned.